Welcome to our podcast at home on the lakeshore, where we talk about home loans with our local home loan experts here at UnitedOne Credit Union. This is episode number 8, and thank you for joining us today. Let's welcome back in our loan experts. Today we have Linda and Carrie. Unfortunately, Julie won't be joining us today, but that's okay. 2 out of 3 experts ain't too bad.
Yeah.
That's right.
And sorry, we do not have a joke of the day.
Well, but I might have covered for you. So I don't have Julie's joke of the day, but I thought, or joke of the show, but I was like, how about Mike's moment of mirth?
There you go. That sounds good.
So that's what I'm going to coin it. So Mike's moment of mirth. So today, or you could call it the corny joke corner or something like that. But so the one I have today is, I quit my job at the helium factory. I refuse to be spoken to in that tone of voice.
Wow.
I'm sorry. I had a tradition to carry on.
Yes, it does fit well with the jokes that we've been providing.
Yes, it does.
I had to carry on with the tradition there. So, Julie,
she'll be proud
of you there.
Yes, she will.
She'll be proud.
Very proud of you.
Okay, well, now that we've gotten that moment of mirth out of the way and our sorry excuse for covering for Julie's joke of the show, but our topic today is understanding your credit and its impact, part 2. So that's right. We did do part 1. Those of our listeners that following the show in sequence would know we did part 1. And we know it's probably not the sexiest topic like we mentioned, but it is vitally important, especially when it comes to owning your own home. And quite frankly, really for a lot of other things as well. So this is part 2. And in part 1, we covered the 5 C's of credit. And, the 5 C's of credit being character, capacity, capital, conditions, and collateral. And we also talked about credit scores and what is the credit score itself, like what would be considered a high score or a low score or somewhere in between, and going into, paying off your monthly balances, and basically that a credit score is just a track record, kind of like a report card you used to get back in school. Are you paying off your loans? Are you doing the assignments? Are you showing that you're being a good student, or AKA a good borrower? And so essentially, are you getting an A? Are you getting a B? Are you getting a C? Are you struggling a little bit? And we want to help you get a little bit more information on that. So I think we're ready to segue into part 2 with where we left off there. So Linda, if you want to carry on from where we left off from part 1.
I do. So this is all part of when we were talking about credit scores, and, some of the things that you may want to know is, what makes up my credit score? What do they look at to give that score? So what actually impacts your credit is, 35% of your payment history, that includes paying your bills on time. If you've had any late payments, any missed payments in the past, 35% is part of that score. Then we also have how you use your credit. So are you actively using it? The utilization. So 30% takes care of that. So now we're at 35 and 30. So then we have 15% is, how long have you been using your credit? So when we say, a credit card, you opened it in 2000 per se, and then now a couple years later you close it, that actually eliminates all that credit history. So you don't want to, if you can avoid it, better keep it open, charge on it every once in a while, pay it off, so you can have the longevity of your credit. So that's 15%. And then we also have a mixed type of credit. So what you're using. So 10% of that is, do I have open lines of credit? Do I have credit cards? Do I have installment loans? So 10% is that portion. And then finally is 10% of your credit also is recent accounts that are open. So if you are out shopping and somebody tells you, hey, do you want to apply for a credit card? If you're interested 100%, apply for it. But if you're like, I don't even know if I'm going to use it, then don't, because that is a hard inquiry on your credit. And then it's a new trade line that's coming up on your credit. So that does affect your credit score because they don't know how are you going to be making payments on this. So if we look at that, it's 35%, 30, 15, 10, and 10 that makes up for 100% of what they look at. Okay. So basically, it's just maintaining your credit is the best thing to do to maintain a good credit score.
I think
Now,
that
I
was
know
something
Carrie. Go ahead,
yeah,
Carrie.
Carrie's got more. Yes.
I was just going to say, like, there's some tips that we can give you for improving that score. There's different things that you can do to help boost it up a little bit faster than other things. So one of the most important things you want to do is pay your bills on time. Late payments can
Definitely.
really, negatively affect your score. So even if you can only make the minimum payment, that's okay. Just pay it on time. That's really, really important.
Shameless plug here, Carrie. Sorry to interrupt you.
Yes.
Shameless plug, but that's why we have things like bill payer and setting those things
Exactly.
up, or even if you prefer to set it up automatically with your credit card or debit card, set those automatic bill pays up so that you're not missing those and you're not being late on those. So we have those tools here at the credit union that have really helped members cut down on those things. So if you don't have those set up, you should really look into those to help you keep your credit score healthy.
Yeah,
Agreed.
definitely.
Yes. And, if you do miss a payment, get current, stay current. The further back those late payments get in your credit history, the less they will affect your credit. If you're struggling to make ends meet, talk to a legitimate credit counselor that can help you manage these things and pay on time. Keep your balances low on your revolving debts. It's not good to have your charge cards all charged up to the full limit. That's going to hurt your credit score. Pay off your debt. Don't move it around. Like, don't get a zero balance credit card and then keep bouncing that balance from account to account. Just work on paying those off. Don't close credit cards. Believe it or not, people think, okay, I don't owe anything on that card. I'm going to close it out. It's going to help my credit score. That's a myth. Doesn't. They look at how much you owe on your credit cards in relation to what your limits are. So the bigger the space between those two things, the better it is for your score. Don't open a lot of new accounts too rapidly. Like Linda was saying before, if you keep opening a bunch of different accounts, that's going to lower your credit score. They're looking at risk. If you suddenly open a lot of new accounts, are you going to be able to make all those new payments? You're a little bit riskier with all that being out there. Let's see what else. Manage things responsibly. We kind of talked about don't charge up all your credit cards, and reestablish your credit history if you had past problems, like a bankruptcy or foreclosure. The sooner you can start making on-time payments after something like that happens, the more it'll help your score go up.
With all these tips that Carrie is mentioning, other things that you could be doing is asking your lender, if you're not sure, I don't even know if I can buy a home or take out any other type of loan, come in, see us, because we also have some other tools besides the tips that Carrie is mentioning. We could look at your credit and say, we have this extra tool that is available to us. One of them, and I'm going to throw some names out here, but you don't have to remember them. But there's like one that's called a Wayfinder. It is something that we utilize in our credit reporting company that we say, okay, so what if I pay off this credit card, pay it down? What if I, pay off this installment loan? Like, we can tell you, we can do like a what if scenario, if you do a couple of those things, will that raise your credit score, to where we need it to be, to that minimum 620 credit score, or to get you to that 740 credit score because you're at 739. We could do a couple of those things, because as we are scoring your loan, meaning that we're trying to get you that loan, if it's not getting approved because we're so close, it's saying something about credit, we could definitely use some of these things that are available to us to help our members, to say, if you do this, that can raise your score to this. If you do the opposite, that's going to go the opposite way. So we could give you tips besides, letting pay on time, pay off, if you have a credit card that's almost up to the limit, get down to at least less than 30% of that limit. We'll give you a lot of tips. It's always good to come in and see us, because you don't know what you don't know.
Mm-hmm. Well, what I was going to say too, there is with some of those scores, I mean, both of you being home loan experts, I'm sure have seen people where there may be just 10 or 15 points off, and that could make all the difference between being approved or not approved, or perhaps having that rate change depending on where you're at on the rate sheet or where we're at in the situation. So some of these things that you're sharing could be those tips that if you're able to work with us help you, doing this handful of things in a couple of short months, you could be in a position to be approved and move that forward, or to see the gains or the savings, if you will, by improving that score, even if it is somewhere in what might be considered small 15, 20, or 30 points. But that could be the difference between a yes and a no, or the difference between thousands of dollars over the life of a loan.
One other thing I wanted to mention was that if you, we pull your credit and there's some items on there that you're like, oh, I don't recognize that. I don't know what that is, or I didn't take out that credit. That's always why you should do your annual credit report every year, just to see what's out there. We can give you tips on disputing some of those items, because maybe it's disputing that one item that's on there that's going to get you that credit score that we need, or that you need. We can help you by directing you how to dispute them. Or even if you have like a bunch of them and you're like, okay, you had some identity theft, let's get you fixed. It might take a while to get us fixed, but it's going to be that initial first step to get you to where you need to be.
Correct.
Yeah. And that's why working with the home loan experts is going to be important too, because we can have access to those tools, give you the experience and the information that you would need to make that informed decision, and to help you get into the home of your dreams, whether that's your first home, or you're downsizing, or any point in between, or maybe it's a vacation home somewhere. So that's why we're here to help you achieve that dream and achieve that goal. And so there's some of these steps that, if you're right there on the borderline, could really help you out. What are some other things that people would want to keep in mind when understanding their credit and how impactful it can be?
If you max out a credit card, it can lower your score 10 to 30 points. So that's just one card. If you have more than one, that can make a big hit on your credit. So take it easy with the credit cards. Even the late payments can lower your score like 60 to 80 points. So
that's a lot of points.
My big pointer is don't charge a lot if you can help it, and make your payments on time. Really important.
Another tip is, if you, like I mentioned before, if you are 100% sure that you're not going to use a credit card that someone is offering you, so at a store, retail store or something, don't take it out, because that's one, new credit that's coming on your credit, and two, that's a hard pull. It's and it does affect your credit scores. The more you have your credit pulled, the negative it's going to be.
So what you're saying is you might save 10 or 15% on that one pretty small purchase, even if it's a couple $100s, versus the
Mm-hmm.
impact that it could have if you're going to be getting into a new home or purchasing a home in the next year or so, that you'll want to keep that as clean as possible. So it might not be worth the short-term
Correct.
savings when you consider that mortgage and those payments over the next, 20 or 30 years.
That is so true.
And if you're getting ready to buy a house or refinance, don't change a lot on your credit report when we're doing our loan. That can have an impact on your debt ratio on what we're able to do for you.
Mm-hmm.
Okay. Well, thank you both. Very good information. Is there any other last pieces that you would want to share? This is part 2, the final part of our understanding your credit and its impact. Are there any other things that either of you see in your real world jobs, real world scenarios or situations that could help some of our listeners or potential people looking to get a home?
And I'm not sure if we touched base on this or not, but we might have about freezing your credit. If you have some activity or you think that your Social Security was compromised in any way, making sure just freeze your credit and or put a note in your credit report that somebody has to give you a call to make sure that yes, truly it is you who is applying. So that's a big tip. In the same sense of that tip would be try to remember that you have your credit report frozen before we apply, because it's going to tell us we can't get your credit score. So then it's, the time to go back, unfreeze it, then we have to pull it again after. So that's another tip that I would have.
I would say
Okay.
if you're going to buy a house, come see us early in the process so we can pre-approve you, look at your credit report, see if there's things that need to be worked on before you're ready to buy that house.
Mm-hmm. We're here for you guys.
Here, ready, got the experience that you're looking for, and can help you hopefully get that home of your dreams, wherever and however that might be for you. So thank you both for joining us today. Thank you to our listeners for tuning in, and lots of good stuff here on credit. We're excited for moving forward in our podcast series and some new topics moving ahead. So we'll leave credit behind for now. I'm sure we'll touch on it again at some point in the future, but for now we'll move on to other topics for our next monthly episode. So if you would like to share a topic with us, let us know. We'd love to highlight your topic or your questions in a future podcast. How can you reach out to us? Simple. Just send us an email at homeloans@unitedone.org. That's homeloans@unitedone.org. And if you like what we're doing, we encourage you to give us a like and rate us wherever you get our podcasts, and feel free to share our podcast with others. You're also welcome to follow us on social media. We're on Facebook, where we can be found at Facebook/UnitedOneCU, and on Instagram with @UnitedOneCU. So looking forward to it. We'll see you all. Our next episode will be airing. We'll be into the summer months and getting into the summertime. So looking forward to that warmer weather and everyone being out and about. But we very much appreciate you joining us, and thank you very much, and take care.
Yeah, take care, everyone.
Bye.